Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today we have the return of a fan favorite on the show. Every time he's on, it's magic. It's Mr. Craig Hemke of the TF Metals Report. Craig, how you doing today?
Jesse, I appreciate the effusive praise. Yeah, we just have a message that I think is understood. People now, as we progress along month by month, year after year, more people are beginning to realize that the end of the great Keynesian experiment is coming, and we've got to prepare accordingly. And I'm just glad that you've got your channel. I'm happy to come on, and I'm glad we can help spread the message.
Yeah, absolutely. Me too. So I want to get started off with silver here because it cracked $26 an ounce last week, and we're still hovering around the $25 level. So I wanted to get your thoughts on both the technical and the fundamental picture for silver as you see it right now.
Well, first and foremost, it's a little bit due for a pullback, and that has been underway since late Thursday. We're recording this here on the April 17th. Friday was a down day. Today's a down day, and mainly just because the dollar has bounced. It bounced from this almost exact same level that it bottomed out on the last day of January and the 1st of February. And that's exactly what it got down to late Thursday and early Friday. And so the dollar suddenly has kind of the image of a double bottom on it. And I think we're now actually even seeing some short squeezing of people that were short the dollar index because, maybe the Fed's done and all that kind of jazz. And so silver's reacting to that. It had actually gotten kind of bullish in silver. To use some technical terms, the relative strength index had gotten a little overbought. I watch the positioning every week of the speculators and the hedge funds in COMEX silver, and open interest, total contract open interest on the COMEX back on Thursday had hit the highest level in a year. So that gives you some idea of the amount of hedge fund speculator interest had picked up again, and lo and behold, they suddenly get washed out. We're heading into the option expiration and the contract rolls for the current front month of May. That too is typically I don't know if you want to call it seasonal because it's every other month, but that's typically a seasonally weak time. So silver's probably going to pull back here. In January and even in December, there was a pretty hard cap in price at about $24.50. It blew through there a couple of weeks ago on its way to north of 26. I'd say that level will probably act as support now over the next week or two. Maybe even, heck, you could even see $23.50. But given the way this is all headed, I mean, Jesse, you and I have seen this movie before. We know how it ends. Fed rate cuts and eventually more QE to try to keep the liquidity spigots going and the plate spinning. Given that we know that's how it's going to end, 23.50 would, to 24.50 would be a higher low on the chart. And then the next move would be to a higher high where we'd finally maybe brush up against that 28 level again.
So same question for gold, because we've been getting close to that all-time high put in of August 2020, and many analysts are saying that once we break that level, it could be off to the races. So it should be mentioned that gold has already hit all-time highs in many other non-USD currencies. If you're living in Japan right now, you're very happy if you're holding gold as the yen weakened. So do you think that 2023 could be the year where gold breaks out in US dollar terms to new all-time highs and potentially beyond?
Yes, and I'm going to refer everybody to my Twitter page at TF Metals, and the pinned tweet, I do this every year, the pinned tweet, and it'll stay up there all year long, is my annual forecast that I typically write in the first days of January. And in that forecast, I said, look, this year is no different really than 2010 and 2019, which were both years that began with the Fed playing these rhetorical games of, we're going to hike rates and normalize, and we're going to draw down the balance sheet. And it was all crap. People believed them, but they were just lying. And as the year unfolded, 2010, and as the year unfolded, 2019, it became clear the Fed was not going to be hiking rates, that rates weren't going higher. In fact, they were soon going to be cutting. And in 2010, actually restarting QE at the first sign of economic weakness. Gold and silver then soared in the back half of 2010 into 2011. It soared in the back half of 2019 and 2020, and it's about to do so again. but it's not ready to do it yet. And in that forecast, I was kind of targeting June as a point by which it would be recognized that we're in a recession, that the Fed has caused a recession through all these, expedited rate hikes, and that they'd be talking about being done and actually be starting to talk about rate cuts. And now here we are. Fed funds futures are pricing in as many as 3 or 4 rate cuts before the end of the year. The Fed themselves, in the minutes to the March FOMC meeting, the Fed analysts said we'd be in a recession by the end of the year. So all this is coming together. We're just not ready to break out yet. And so, as I've referred to it for people on my site, you're going to have to hang in there. January was kind of a fake out that got everybody excited. Then you had a pullback. The last couple of weeks weren't necessarily a fake out, but it was a period that got everybody excited. And now you're having a pullback again. The market's going to try to wrong foot you. But we will break out. And what typically happens, Jesse, and I know you know this, but not everybody listening to us knows this. Whether it's gold, silver, corn, an equity, anyway, anything, you name it. Once you make a new all-time high, my typical rule of thumb over the last 30 years has taught me that you usually then shoot forward about 10%. And that's because, you get some publicity. You get headlines in the Wall Street Journal, hey, cocoa makes a new all-time high. And everybody goes, oh, cocoa, I didn't even follow cocoa. And all of a sudden, everybody plows in and you get a run of 8 to 10%. This actually happened in gold the last time. We got through 1920 and we went to what, 2080? $160 is what, about 9%? So in that annual forecast of mine, I said, okay, your first target should be about 2,300. You get above 2080, add on about 10%, and we're going to target 2,300. This notion that, I've seen it on Twitter, people saying, oh, gold's going to zoom from once it gets above 2,000, it's going to 3,000. Okay, but it's not going to do that like in a month. The banks are still in charge. The banks run the futures markets, and then they're the ones that are responsible for delivering metal at that futures price. They'll be in their typical managed retreat process where they perceive themselves to be managing their risk. And the chart kind of takes a 3 steps forward, 2 steps back kind of pattern. So we'll go above 2,100 probably by summertime, and then we'll peak out near 2,300 and then consolidate, and then eventually probably tack on another 10 or 15% on top of that next year. But so anyway, long answer is I disagree with the people that think we're going to completely, have this massive moonshot as soon as we hit new all-time highs. We'll go to 23 or so, and then we'll see where we go from there.
So I have a question for you that I've been getting a lot in the comment section of my interviews about precious metals. And that is with the US government seemingly getting more and more Orwellian, and they're still trying to catch up to my home country of Canada at this point. But people are asking, what if it gets to the point where the government tries to confiscate people's gold again? Now, I think the gold holder of today is far different from those back in 1933 when gold was actually just money at that time. Now people stack precious metals because they want to be outside of the financial system and they don't trust the government. So I don't think people are just going to start handing in their gold. But what is your thoughts? Could the powers that be actually attempt something like this? Or do you think that's too far outside of possibility?
Well, Jesse, this has come up for about as long as I've been doing this. Going back to 2010. And so I'll just answer this just to be consistent, the same way I always have. Maybe in 1933, you could go from town to town and tack a note up on by the post office or whatever, and with guns drawn, tell everybody to turn in their gold. And the amount of people that did even back then was not a real great percentage. A lot of it ended up under mattresses and the like until it was passed down from generation to generation until it was legal to hold it again. No one's going to be able to do that in the year 20 whatever because of the internet, right? And so much gold is that at least that you and I and the people that actually hold gold, so much of that is held in, again, coins and bars that are buried at the bottom of a lake, and that sort of thing. So I don't think that's going to happen. I think a greater risk is some type of windfall profits tax, let's call it that, where you were smart enough to plan ahead. But now if you go to sell your gold for whatever currency, and convert it back, you've got to pay a 90% excise tax, some kind of something like that, or maybe it's more likely that they do it on the mining shares. You go to sell. Every mining share has a certain security code class, and if a QSIP number attached to it, that if you liquidate it, that gets reported, and you got to pay 80% tax, above and beyond capital gains, some other, dystopian cryptic BS that the government might try. I'd say that's probably more likely than some confiscation plan. But again, as we're finding out, God, you can't put anything past these people. But that's what I've always thought, regarding confiscation. That still would be, and again, I don't think that's an eventuality. I don't think anybody should say, well, then I don't want to own any of that stuff. It doesn't have to work out that way. That's just, if we were to trend in that direction, I just think that's more likely than straight up, gun to your head confiscation.
Right. And speaking of government overreach, we've discussed central bank digital currencies every time you've been on as well. But it looks like they could be getting a little closer if a lot of people online, the fear online is real. And that is with FedNow being launched, which they're officially labeling as a service to help enable financial institutions to deliver end-to-end faster payment services to their customers. And of course, after the rumors started swirling, the Fed came out and denied this. They actually tweeted, FedNow is neither a form of currency nor a step towards eliminating any form of payment, including cash. So it's funny because the same thing came up last time we talked about 15-minute cities, and people were pushing back against that online. And then the government officially of whatever place it was in England was saying, no, that's ridiculous. This isn't true. It's fear mongering. But then when they kept talking about it, they did connect it to climate change. They said, oh, well, this is just, we're trying to make it more convenient and also to reduce people's carbon footprint. So you just know it's going down a slippery slope. So in this situation, could FedNow be a Trojan horse for a future CBDC rollout, or is this all being blown out of proportion?
Oh, it's definitely not being blown out of proportion. But I don't think it's something that's going to just appear overnight, absent just some total financial collapse. We've been talking about, again, this goes back to the length of time that I've had a website. This, what was always called war on cash. What do we need $100 bills for anyway? The only people that use those are like bookies and drug dealers. You don't need it. Just wave your card. All you have to do now is just tap your card, right? That's all you got to do. What do we need cash for? We need cash so that they can't track what you're doing, so that they can't deny it. Remember, they were like, what was the news last year about you couldn't use your Visa card in the U.S. to go to a gun store? That sort of thing. So the war on cash is a real thing, because that is a threat to your individual financial sovereignty that America's founders were writing about 250 years ago. Now, the CBDC may eventually get to that dystopian type level. To begin with, though, it's going to allow the central bank to circumvent the spending power of the legislative branch. Go back to TARP. Remember like 2008, and all these investment houses were on the verge of going under. And then finally, when they came after Goldman Sachs, well, that was the end of that. And all of a sudden it was TARP. The something asset rescue program. I can't remember what the T stood for, but anyway, it had to be $700 billion, and they had to strong arm the Congress. I remember the first time they tried to pass it, it went down. So then they had to run Bernanke out there to make all kinds of lies up about how, no, this isn't for Wall Street, this is for Main Street, and and it was all BS. John Titus if you don't know John Titus of Best Evidence on YouTube, he laid it all out. He's got all the facts now, all the statute of limitations on the Fed stuff is now all off. It was all lies. They had to convince Congress to give them the cash to rescue the banks. What they're setting up now is just a direct way for the central bank to rescue their member banks. It's like remember Mother Yellen came out and said, so maybe we'll have to backstop all 17 trillion. Remember she said that? Yeah. Everyone, whoa, wait a second. And then the next day she's saying, well, maybe I misspoke and it won't. Well, she was telling you the truth. And the central bank digital currency, or FedNow, will allow them to do that. You get a place like Silicon Valley Bank that's upside down, assets versus deposits, because their bond portfolio moved the wrong way. Well, then FedNow just Just some zeros and ones in a keystroke and all, hey, look, they're magically liquefied again. So I think that's the first purpose of that. Again, like I said, whether this ultimately becomes this dystopian thing where you have to use their cash, and if you don't use it for whatever purpose they think is good, we'll see what kind of world we live in by the time they get to that, and whether there'd be enough pitchforks and guillotines to allow them to actually make that happen.
Yeah, and we were speaking offline before the interview about why I moved to the Balkans, and that was actually one of the reasons as well, is that a lot of the Balkan area, they don't accept cards. They only use cash. A lot of cafes, a lot of restaurants. So at the same time, it makes it much more difficult to implement a sort of cashless system and a cashless society. So you mentioned Signature Valley Bank there, and I was wondering, or Silicon Valley Bank rather, and Signature Bank was another bank which collapsed. And I'm wondering if you think this is part of a bigger trend of regional banks being shut down to concentrate all the capital in the too big to fail banks such as JP Morgan. And perhaps if this were to occur, I mean, we've already seen it to some extent, but do you think that's a way for the Fed to have greater power over the banking sector as a whole?
Yes, but I think it's too simple. Because I've seen all that stuff on Twitter too, to just say, they're going to shut down all the banks, all the small ones, commercial, little, the local First National Bank of, Bumfuckville, and fold that into Wells Fargo. But that consolidation, it doesn't have to be all of them. It could just be 10% of them, and you get more and more power into just a handful of banks. But under this system, there's always going to be a role for the smaller banks, at the local level. And so I don't know, if it'd take quite a situation to fold them all into just 4 or 5 banks. I get the argument, but I'm not sure that it's plausible. It's like arguing theoretical physics and, it can certainly be done. And then in the real world, I'm not sure you can hang an elephant by its tail, off of a cliff. You can probably come up with a formula to show that it works. But in the real world, whole other story. But this kind of gets to, though, and I'm glad you asked the question, because this problem is still there. And this notion now, gold and silver have been falling for a couple of days. And on my side, I've called it a mini February, because gold peaked at about 1960 or 65 in January. And then all of a sudden, the data temporarily got stronger in February. And Powell, by March the 7th, was talking about higher for longer and 50 basis points in March and all this stuff. And that's when all these bank problems reared up, because there's so many banks that, because of the tax law changes back in 2008, are allowed to carry bonds on their books priced at maturity rather than marked to sell. They have these 2 separate categories. Well, if you get a run on your bank, which now we know can happen digitally in a matter of hours, all of a sudden you got to sell some stuff that you were carrying on your books priced at maturity, not at 80 or 85 cents on the dollar, 100. And all of a sudden you find out, well, these are actually only worth 85. And now you've got less assets than you have liabilities, and you're insolvent. And then the run exacerbates. Well, anyway, if rates go back up, if the 10-year note goes back up to 410 or 415, where it was in March, well, the hell, you're right back to where you started, right back where we were. Which is why rates aren't going to go up like that. That's why it's a mini February, not an actual February. That's why this pullback in the metals we're seeing currently will be more shallow than it was in February. Which is why we're still trending toward a breakout by summertime. So that's the first thing people understand. I saw something just today. One of the research companies, what were they called? On something, that was all over Silicon Valley Bank. And, their balance sheet and their risk profile says the mother of all these is U.S. Bancorp, out of, where are they based? Minneapolis or something? And that they're worse than, they're at least in the same situation, if not the other. Okay, so what's going to happen if rates go back up and all of a sudden, an even bigger bank like that, now that one's the largest bank failure in the U.S., that sort of thing. All of this is out there if rates keep going higher. So this situation is still there. And that's, again, where maybe the Fed is looking over the horizon and Mother's talking about $17 trillion backstop because they know the situation is out there and they're trying to walk a tightrope between getting rid of inflation and trying not to spark a banking crisis.
Yeah. And so you also mentioned at the top of the show, the end of the Keynesian experiment is coming. And I'm wondering what you think ultimately will happen with all the debt that the US has accumulated. Will a monetary reset be forced? And could that be where the CBDC is eventually introduced? Could they be forced into some sort of gold-backed currency just to restore credibility somehow? Or can they Japanify the economy and just keep going on with seemingly endless QE as that country has done?
That's the easy political way out. That's what they'll do. They'll Japanify. They'll just keep the Fed next time there's a big crisis, the Fed will start buying equity ETFs, just like the Bank of Japan has. This time they were buying corporate bonds and junk bonds this last time, right? So, that's where it's all headed. They're not going to suddenly be responsible, and somehow that's just not going to happen. And the politicians won't let it happen, which is another reason why the Fed's going to be cutting. Because Powell likes his job. And if we are, cruising into a really sharp recession at the beginning of a presidential election year, the calls from Elizabeth Warren and Bernie Sanders and all these other Democrats for Powell's head on a stick, and Biden will just cut him loose. Oh, no Fed president's ever been fired before. Yeah, well, it's the first time for everything. Okay, so that's the direction they'll go. If anybody's going to try to inspire confidence in their currency by backing it with something, it's going to be an alternative to the dollar. And again, people think of this as some kind of zero-sum game too. I see it. I've been talking about de-dollarization for about as long as I've been talking about the great Keynesian experiment and the mathematical certainty that all of this is going to implode. De-dollarization is not one day your dollars are worth something and one day they're not. And everybody goes from the dollar to this. It's just a chip away process where the dollar's up here and something else is down there and they're just gradually going like this the whole time. And people need to think of this. It's not as a zero-sum game. Over time, the dollar just gradually loses its use internationally. And you think, okay, from 80% to 70% or whatever, it doesn't seem like a big deal. But when you think about the trillions and trillions and trillions of these things laying around, and if you don't need to hold dollars, or at least you don't need to hold as many as you used to, then those are going to go someplace. And in a world where the supply of dollars is ever increasing because of these central bank policies and the politicians that kind of drive the whole thing, you get in a position where the demand for dollars is falling. It's really as simple as anything else. If you get a bumper crop of oranges and your supply of oranges is soaring at the same time a report comes out that says there's a component of orange juice that's carcinogenic, and the demand for orange just goes down and the supply, well, the value is going to go down. And that's what we're talking about with the dollar. So you've got this environment where they're just going to keep printing more and more of them to try to keep everything going. At the same time, the demand for all of that is contracting over the period of the next few years. That's a pretty positive environment for everything that's priced in dollars, probably including stocks. And so, the kind of crack up boom, Jesse, remember that term from about 10 years ago?
Yep.
That's probably where we're headed.
So I wanted to move on to maybe a bit more of a philosophical topic, and that is that of personal sovereignty, individual freedom. I think all sound money advocates believe in this. If I was if government intervention was coming in strong and somebody was to ask me, okay, you need to pick some people to be around you, who's your community? I ask, who are the people stacking gold and silver? Because those are the people who I'd want around me. So I'm wondering, do the reason that Western countries at the moment in particular, the legacy brand countries, my country of Canada, the UK, the US to some extent, the reason they're taking such a hard turn into an authoritarian policy is because this is kind of their only choice to protect a dying system and maintain their grip on power. Is this like a wounded animal lashing out, or do you think they'll be able to maintain this for the long run, for the next generation as time moves forward?
It's exactly what it is. I think you've described it right. It's they are trying to protect their system by which they've benefited at all cost. I think part of it, I don't want to make it sound like they're benevolent or altruistic or anything, but they have to know, and I say they, I don't know how you want to classify them, but anybody that is in a position of authority trying to perpetuate the system through more and more draconian measures has to understand their history. And the mantle shifting from one reserve currency to the next is usually not a peaceful process. The UK gave it up by virtue of World War II. And you could say them handing it off to the US at Bretton Woods was about as peaceful. I mean, again, we're talking World War II. Force this. It's just generally, you don't just like say, this was really nice. I really like this reserve currency thing. This is awesome. We've been able to print these dollars like crazy and ship them around the world, keep inflation low. Everybody's got a new house and a new car. That's fantastic. But, we don't want that anymore. You have it now. And we'll just take over all the pain that comes with it. It's generally, that's not how it goes, right? We're going to fight for this. You could make the argument, why does the U.S. have how many military bases and how many countries around the world and this blue water navy that goes everywhere? Because we're trying to protect that status as long as possible. And so if as a national security, interest, if you want to look at it that way. So again, not to make those folks seem benevolent or altruistic, but they probably know their history and know that if we don't continue locking people down and forcing them into these boxes, then this is all going to get out of hand and a war is going to follow. So maybe I've given them some credit here. However, it's going to happen anyway, most likely. And what most folks don't, and this is what's really hard for people to grasp, is everybody suffers from kind of a cognitive dissonance, if you will, that's brought about by recency bias. Now that makes it sound like it's because I took a few psych classes in college that suddenly I'm an expert. But Jesse, there's really nobody left alive that remembers a world where the dollar wasn't the world's reserve currency. Right? I mean, okay, my dad could still have, he died a couple of years ago. He was born in 1929. But even then, what was he, 9 in 1938? Before world, he wasn't thinking about that. And so there's really nobody left. And so therefore, it's really hard for most people to imagine a situation where tomorrow's not just like yesterday. And so we've got to do, you and I have got to do, we've got to try to get as many people thinking about this as possible so that they are prepared, so they're not caught flat-footed, so they don't end up, remember all those lines with COVID, the line coming out of Costco, and there's always there's somebody's in the back of that line. There's some dude standing there, with his cart. He's about 250 deep in the queue hoping to get in. You don't want to be that guy when all this stuff happens financially. And that's your mission in life, and that's mine too. We got to warn people this is coming.
Yeah, absolutely. And speaking of which, what do you think is the reason for so much compliance, particularly during COVID, but it feels like in a lot of the Western countries, Canada is kind of an extreme example. I just think a lot of different factors came together. The whole, it's been such a peaceful society, relatively speaking, for so long. I think the whole kind of Canadian attitude of help out your neighbor was taken to the extreme level, the Ayn Rand altruistic level, that ended up kind of backfiring on society as a whole. But it just feels like Canada's kind of a game, set, and match, hook, line, and sinker play for whatever powers that be to be able to kind of manipulate and control. And I know in the U.S., you obviously have the people more on the Republican side tend to be more against regulations and restrictions, and then people on the Democrat. Obviously, I'm generalizing here, but it does seem that way. At least it feels more like a 50-50 split. So I'm wondering what you think the reason is for people giving in to government coercion so readily and without putting up much of a fight? Is that just living in an era of peace for too long? Is that connected to just the existential threat of death and how people figure it's better to be cautious than to, throw caution to the wind and I'll just do what the government says? What do you think is the root cause of this kind of mass compliance?
I think you've got part of the picture there, Jesse. I think people generally are nice, right? I mean, really, most people are just like you and me. I mean, you just want to raise your kids and you want them to be safe and healthy, and that's your primary concern. And so they want to be nice and they want their comfortable life to continue. And, the government offers you this, what do they call it, kind of a Faustian bargain. We're like, well, if you do this, we'll let you keep this.
Yeah.
And so they play along, and you think, okay, you like to think your government is, again, keep using that word, benevolent, but really your only contact with your government might be the nice person who smiles at you at the post office, right? Or you're a friendly police officer who you go up when you see them and they're not writing you a ticket. You go up and you see them, and you thank them for, their service. You don't see this massive, monolith that is slowly chewing up all year. They just think, oh, my local post office guy's a nice guy, so the government must be good. Or I know, my brother-in-law's friend is on the city council and he's a good dude. So government, so they think, or they don't see Jamie Dimon. They don't have to deal with Jamie Dimon or some other, or Goon Williams. They just see their local banker. And when I need to go into the bank and get something notarized, those people are awful friendly. So they don't see the bankers and the financial system as a threat either when they are. And so I think all of those things kind of combine into this stew of compliance, And again, people on balance, I don't want to sound harsh. It's not that they're not smart, but I think they're lazy. And they want to believe that everything's going to be fine. And they can just go on about doing their thing, And unfortunately, that might have worked 30 years ago. It might have worked even 15 years ago. But going forward, people need to be thinking for themselves. It is absolutely critical that you take the time to, because again, you don't want to be that guy, number 251 in the queue at Costco. Because these events are all definitely happening. You can't say, I'm not going to sit here and say they're going to happen by June, right? But they were definitely headed in that direction. And so, again, you don't want to be the last person to figure this out. You've got to educate yourself. You've got to take the time to understand what's happening and why it's happening. And then kind of, like I've always said, prepare accordingly.
Yeah. And the final question here is all of this, we're also seeing a lot of really radical ideology emerging, political ideology into societies that seems downright ridiculous to most people who believe in logic and common sense. But I'm wondering if you think the reason for that, the authoritarian control, we talked about the dying system and perhaps a wounded animal lashing out, but do you also think it could be because our entire monetary system at the moment is based on an illusion? There's those who argue that a society without sound money, when money itself is fake, that society is doomed to their morals and ethics will just degrade as a natural consequence of that. Would you agree with that? And do you think a return to sound money at some point could perhaps restore sanity? Big philosophical question there.
I'm tempted to use the term that I despise because it's used by people that want to sound smarter than they actually are. But relating sound money to the societal changes might be a case of causation and correlation. Because I see that a lot on Twitter and I've seen that in like the YouTube comment section. People that they've heard that term before, and so they're waiting for a chance to drop it on you because they think it makes them sound smart. Well, causation is not always correlation. Well, sometimes it is. Yeah, it is, and you can see it in life. In this case, I'm not sure. I think it's not a direct relationship. You could say, and I mean, what is a direct relationship? Let me put it this way. Nixon closing the gold window and going to a totally unmoored currency debasement schedule is clearly related to the wealth inequality, income inequality, and everything else that has widened out in the last 50 years in the US. Yeah, you can pull up all kinds of charts where everything, the going to shit level goes like this beginning in 1971. And so this idea, the politicians pit everybody against each other. Everybody says, it's the Republicans' fault of this. It's the Democrats' fault of that. And I suppose to some extent all of that is true. But most of it, the wealth inequality, income inequality, all goes back to the changes that were made when we closed the gold window and went to this unhinged fiat currency regime. From there to say, that's why we've got drag queens reading to 5-year-olds.
Yeah.
I mean, I'm kind of stretching your analogy. It's a multi-step process. It's not just, 1 to 2. I mean, that's up the line somewhere. I do think, though, that there's something, not an argument, a case study, a theory that could be laid out, that at the end of empire, you get this kind of debauchery, where anything goes, because everybody's just fat and happy. So, and anything goes. You could probably make that connection, to the end of the Roman Empire or the end of any other monetary power. Anyway, I'm rambling on. You asked me a pretty simple question, Jesse. I think it'll be interesting to see where this all goes. I have been concerned since the day I started this site, not long after the great financial crisis, that we, at least in the U.S., are all being pitted against each other. And to the point where, where you used to have some common ground with people, now people look at you like you're their enemy. And, in the U.S., we've had a civil war where, brother fought against brother. Well, why? Because eventually they were so pitted against each other, they couldn't find reconciliation. And I don't, I'm not saying this is going to end in a civil war, but we've got a whole fabric of society that has to be restitched. And maybe that comes around and gets brought back together through some kind of economic hardship that allows us to wash away all of this excess. The lack of education of people, they've created kind of a permanent, what do you want to call them? Low income, low education class. I mean, we got to get everybody going in the same direction again. And that's going to be a process too. That's not going to happen overnight. Maybe that'll come about after an extreme period of hardship that leads back to some, form of sound money again.
Well, Craig, it's been a fascinating
that was a happy,
conversation.
Upbeat way to, thanks.
Yeah. Hey, we're not about happy and upbeat on this show. We're about reality, all right? We're about telling it like it is. So That's great. It's been an awesome conversation once again. For those who want to learn more, could you tell us once again about the TF Metals report and anywhere else you want to direct people online?
Well, first, that I mentioned that Twitter handle earlier. I mean, I remember, I'm old enough to remember, Jesse. All the stuff about the first time somebody sent an email, and you're like, wow, that's crazy. Or you could go on a chat room on America Online, and actually communicate with people. And this is wild in real time. So now I've got this Twitter platform where I've got 61,000 people that that's like a stadium full of people. That's crazy. So that maybe is the first thing, because I try to put some stuff on there. But the main thing is there's a website, tfmetalsreport.com. I'm very proud of it. It's just the right amount of people. Rule number 7 in the rules and guidelines is you treat the golden rule. You treat people the way you want to be treated, which is pretty unique on the internet, as far as I can tell. So everybody gets along. We realize it doesn't matter where you are in the world. We got people from everywhere. We got people all political stripes, but we all recognize that we are in this boat together. And we're all trying to help each other out. I talk about price, the stuff we started with, about the pullback and where might you find a dip to buy, because it will just be a shallow pullback. And if you're looking to put some more money into physical metal, I provide that kind of analysis with a post in the morning and a podcast every day. But the other real value of the site is just being on it and learning from everybody else and all the other, whether it's about mining shares or what's going on in the world or whatever. all of that gets provided by the members. And so for $15 a month, I think it's a pretty good deal. And again, you can find it all out at tfmetalsreport.com.
Awesome. Well, I'll put links to both your Twitter and TF Metals Report in the description so viewers can check those out. Thank you once again for joining us, and we'll definitely have to do it again later this year.
It's always a pleasure and an honor, Jesse. Thanks for doing all you do too, my friend.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.